break down those numbers now with Ashraf Mohamed, a market analyst. Ashraf, many thanks for your time this afternoon. Let's start with that overall performance on the JSE that we saw today. Some of the global catalysts that would have contributed to the local bourse being over 1% in the red.
Well, it was largely the reflation trade. You also had commodities trading lower. Platinum was lower, and the rand was also stronger until the last hour of trade.
Right. Let's talk a little bit about company news. RMB share price trading upwards of about 12% at some stage today after their headline losses improved a little bit.
Well, RMB is no longer the company it was a year ago. There was a restructuring. It's now predominantly a property company into what we'd say are unlisted REITs operating predominantly in Europe. So the business has changed, and if you look at the underlying NAV of the business, £3.55, it's trading at 166. So it's a significant discount. I calculated around a 56% discount to NAV. Not that I think it will trade anywhere close to NAV, but for those types of assets and underlying operators, I expect a discount of somewhere closer to 30 to 35% of NAV.
Right. Now, more company news into mining now. Northern Platinum, that's another mining company that's benefiting from good metal prices. You would have seen in their numbers today.
Absolutely. And, again, Northern was down on the weaker platinum and palladium prices. But structurally, the business is in far better shape than it was a year ago.
Right.
So I definitely think that on that basis, it's one of the preferred platinum players along with Anglo-American Platinum.
Right, and then there's Resilient, a trading update. Not a lot of information coming out of that particular update today, but they have reflected what the property market has been going through since the pandemic started, and not just locally, but globally as well.
Yeah, and the important thing was that they are going to pay out a dividend, even though it's going to be 24.2% less than the previous one. The fact that they are paying a dividend is certainly going to encourage investors to buy into it, because there are very few REITs listed in South Africa that are declaring dividends right now.
Right, and then on the back of that, the declaration of dividends and a lot of the companies, like you've mentioned, not declaring dividends, in fact, just choosing to save cash. The outlook for the property market in South Africa, what is your feel and in terms of investment? Should we be holding? Is it something that will bounce back?
Look, the low interest rate environment is certainly good for the listed REITs. It will help them. Especially those that are exposed to retailers and high-end shopping centres. Those are the areas where most of the pain is being felt at the moment. Obviously, commercial offices will start seeing more pain as the year proceeds. So, to me, the low interest rates certainly gives them time to breathe. But I think we're going to see a restructure of the property sector, and it's those who are flexible and move quickly who will benefit. And I don't think we'll see the winners in the next year. I think over the next 3 years.
Very, very grim outlook there for the sector, Ashraf, but many thanks for your time this evening. This is Ashraf Mohamed, who's a market analyst, giving us a wrap on the markets day.